This morning I did something that some people might consider to be a little bit crazy, and that was I traded completely naked price action, no indicators whatsoever on my screens. And I did that for a couple of reasons. I'll explain in the second half of the video, but right now I'm just going to cut to the screen capture that I did. I started up the screen capture right before we opened up this morning at about 8:25 a.m. and just went through it minute by minute, trading, no indicators whatsoever, just straight up raw price action, nothing but the candlesticks. So it's pretty interesting how it turned out. So yeah, let's get into it.
Okay, so like I just said, we are going to trade today and we are going to use no indicators whatsoever. So as you can see, I'm going up here, studies, remove all studies. Do you really want to remove all studies? Yes, I do. Now we are only looking at the candlesticks and nothing more. So let's just see how effective we can be when we have no studies whatsoever on the charts. Market's about to open up right now. The only thing I'm going to look at is price action. I'm going to change up my time frames. I'm going to make some support and resistance lines when I see them, and make some trend lines. But yeah, let's do it the old school way here today. There may be moments when I pause the video because you may not want to be in here every single minute when there's not really a lot happening, but let's just see what we find. So you notice I've got Amazon over here on the left, I've got SPY on the right. I can change up and see what I'm looking at here. Like, let's take a look at the Qs, see what they're doing. So the Qs just fell out pretty hard in this first minute of the day. I'm going to keep my eye on this level right here, right around 440, 42, because you can see this is where we had multiple touches in pre-market. So if it breaks this level right here, I'll really start to pay attention. If it broke this one, that's a lot more significant, because you can look left and you can see that that same level had all these multiple touches right over here too. So I'm going to create another alert right there. Let's check out what the SPY is doing on the minute. SPY in pre-market looked like it was trending up, but then we just fell out real hard right here in the first minute. So let's keep an eye on that. I'm going to put a level right here now. So we'll pay attention if it indeed pops up over here. Let's check out what AMD is doing. So AMD fell out pretty hard over the first couple minutes, but let's zoom out and let's check the hour view on AMD. So yeah, AMD has had a rough week last week, but you know, that could be good for us because we could retrace and fill in a lot of what we lost last week. It's a possibility. I'm not saying that I think that's absolutely going to happen, but that is one thing that you should be looking out for right now. I'm going to place an alert right here because this is a relatively substantial level at this point. I'm going to put another one just a little bit above that. Now, all of these levels that I'm putting, this is just all visual analysis. There's no like scientific calculation going on. It's just using your eye to be able to see on the charts where the price has made a lot of touches and therefore, you know, either gotten hung up or played around at a certain level or, you know, bounced off of a certain level. This is really like the core of my whole strategy, is just using the visual analysis that you see and making your reads based on that. Obviously you can use indicators to help you out with that, but you don't necessarily need them. It can make your life easier for sure, but you don't gain your success through indicators. You gain your success through your own ability to read price action on a chart. Now let's put this on the 1 minute. So we see Amazon just fell below one of my alerts. That's the little sound that you just saw. So let's check that out. Yeah, it's looking pretty rough. I'm just gonna check the price of some Amazon puts right now. So yeah, Q's falling out. Everything's looking pretty rough right now. Yeah, wow, yeah, things are falling hard right at this minute. So I'm going to add some Amazon puts. I'm gonna add the 185 puts, and I'm gonna wait for price to retrace just a little bit. I don't need to see it come back all the way up here, but I'm gonna wait until we get closer to this level where we were playing around at, and then I'm going to get in short with the 185 put. Yeah, I just want to see it come up just a little bit more, and then I'm going to get in short. Because remember, if we're going short, we want to get in short when we get that top tick of like a green candle, so we can make the best use of when the price actually does fall out on us, and then vice versa if we're trying to go long. I'm going to get in right here. I got opened up with 3 put contracts. Now it could come back even a little bit more, and if it does, I'll add in, which is something that I frequently do. I'll get in a couple different times, get in once or twice or even 3 times before I've reached the maximum size that I'm going to work with on that particular trade. So each one of these put contracts is trading for about $175. So I just opened up my position with 3. And at this point, I might add in, might just keep it where it's at. We're going to see what's going to happen in the next couple of minutes here. So if we pop up a little bit harder and get closer to that little cluster in the first couple of minutes, I'm definitely going to add in there. But if it looks like we're going to fall out, I might actually add in some more on the way down too. So yeah, I'm gonna do that. I just added in 3 more because yeah, based on what I'm seeing on the candlesticks with that really, really long top wick from this candlestick at 837, this told me that it wanted to pop up and it couldn't. So at this moment, right now, as I speak, I'm already up nearly $100. So I'm going to sell one of my contracts right there. So at this point, I have 5 more Amazon puts. I just sold 1. Now I'm gonna let's change up. Let's change this right chart to also be Amazon, but let's put this on the 5 minute. So this will give us a slightly zoomed out view of where price action is. As you can see, this right here is definitely an area where price might get hung up. So I'm going to create an alert below right there. But yeah, I mean, when we come down here, if we fall through this level, then that means that we're falling out hard. Yeah, and then this level right here in pre-market, I'm going to set another alert for right there. Yeah, we're falling out hard. At this moment, right this second, I'm up over $150. It's not even 10 minutes into the morning, and I've made $150 using no indicators whatsoever. Nothing but price action analysis. And that's what you can do if you have skills and you know what you're doing. I'm going to sell one more right here. Just trying to, be a little bit conservative, although a big part of me wants to just, watch it fall out and ride it all the way down to, here or here. I'm still trying to be a little bit smart because, anything can happen. Like, that's the one thing about the stock market is that even when you're right, even when you have confidence in your abilities, to predict price action and you're right, still, even so, anything can happen. That's why you don't ever want to just open a position and then just try to ride it for absolute maximum gains before you take any profit whatsoever. Because even though that can work for you, frequently, at a certain point, price is going to turn around. And so, I'm thinking that we might get down to here or even down to here, but it could very well get really hung up at this level and then come back up. And then at that point, if I hadn't locked in any profit, then I'm in trouble because I didn't gain anything because all of my positions remained open and then it just completely reversed on me. That's not what I did. I just closed out 2 contracts. So even though right now, when we look over here at the minute chart, this one's reversing on me slightly, that's okay because I'm still up on my overall position because I locked in some profits as we took those big washes down. And yet I still believe that the overall direction today is going to be negative, and we're at least going to fill this gap. Now, all day long, are we going to fall out all day long? I don't know. But when I looked at this, right when I first got up this morning and I saw this, I said, man, that's a gigantic spike. I think that we're going to fill that at least, early on in the day, which is what's been happening. Okay, I'd paused it for a few minutes, but we're back. You can see that a couple minutes ago, we had 2 little areas here, 835, 836, and then 840 to about 843, we had these slight retracements, but that's happening on the way down. Basically, it's like stair steps. I'll frequently say that when stock is going in a particular move, you'll get these stair step effects where you'll go down a little bit, will come up, go down, come up, and go down. So I never really got close to stopping out on my position. If we had broken up above this level right here, this is the level that this morning I'm thinking would be my stop out level. But we have not gotten close to that. So, I got in fairly early. And if we broke up above around right here, this would be where I would say, okay, this play did not work out and let's, cut our losses. But as it turns out, it has worked out, and now I'm just kind of letting it work. We got these really dramatic washout candles right here at 834 and 838. Now, we might not get, any more of those, but I also don't think that we're going to suddenly just come all the way back up to here. Could happen, by the end of the day, but based on what I'm seeing right now, I don't think that that's going to happen in the very near term. So I'm just, hanging on to all of my open contracts that I still have. Like I said, I already closed out 2 for a profit. I've got 4 still open. So let's just hang out and see what happens. Okay, so it's a few minutes later. You can see that just for the last 10 minutes or so, we've just been basically plateauing, like nothing much has been happening. And right now, as I speak, we're getting a nice red washout candle, so that's good for me. I haven't done anything over the last 10 minutes or so. because I'm still ahead on my trade. So there's nothing to worry about. I'm just waiting for it to fall down below this point right here. That's really what I want. When we get close to here, I'm going to close out probably another 1 or 2 contracts. But I'm waiting until this moment before I do anything. And then on the other direction, I'm not going to stop out any of my contracts unless we got back up to this level right around here. So it's just been like a tug of war for the last 10 minutes or so. So we're just hanging out, just watching and waiting. Okay, so we're back. It's a few minutes later. As you can see, we've just been grinding sideways for quite a while now. And that's definitely not what I like to see. If you've read my book or have been paying attention to any of these videos, I like trends. So I like to see things trending very strongly in a particular direction, which is not what's been happening over the past 20 minutes or so. But one thing that has happened is we've now developed another intraday level right here at this 185.91. And this has become a significant level because of all the touches that we've had. So if in fact price does break below that level anytime soon, that will give me some confidence that will continue to head in the right direction for me, which is down, since I have puts on today. But we're just going to keep it open, just stay on the ride. Things don't always work out exactly how you want them to, when you want them to. A lot of times you will need to just wait it out a little while. You'll open up your position and then, you'll go for a period of time where you're not really gaining or losing any money. So you'll frequently have these moments where you're just kind of waiting. But let's just hang out and see what happens. Okay, it's a few minutes later. We just broke below that alert level that I had set. So you see that line that was there is gone now because we just broke below that alert, and then therefore it erased it. So that's what happens when you place an alert and it breaks through your alert. It'll just take it off your screen. Haven't done anything with my positions. This is good for me in the last few minutes, but I'm still just holding out because I wanted to get down to right around this level before I close any more of my positions, because I'm trying to maximize my profits, obviously. And since we've touched here once already today, I feel like we are going to touch here again if we do indeed continue to trend downwards. So I don't want to close my positions before I've really maximized their value. So I am going to continue to hold them open, and hopefully we'll get down to around this level, and hopefully we won't get back up to this morning level right where we opened up. But it's very, very choppy price action right now, which is not what I want to see. But again, you just take it minute by minute and just keep your position open until it's really time to stop it out. One thing I wanted to mention here, whenever you see long wicks on a minute candle are very telling, because what that means is that the price tried to go in that direction and it didn't have the strength to do it. So you can see, like right here on this green candle at 835, we've got this really long lower wick. And what that means is that price tried to drop out even further. It failed. Very next couple of candles, you've got this big green candle, and then we see exactly the same thing, but in the other direction. So we have this really long upper wick on this red candle, which means that price tried to keep on going further to the upside, but it failed because it didn't have the strength to do that. And then in the next two candles, you'll see they're large red candles. So frequently, when you see a long wick in any one direction, you'll see it go in the opposite direction right after that. Now that doesn't always happen. Like right here, 8:51, we see this long upper wick on this green candle. It didn't fall. It actually popped up the next couple of minutes. And then you see this long upper wick on this red candle, and then we have been popping up just in the next couple of minutes. So it's definitely not a guarantee. Like if you see a long upper or lower wick, there's no guarantee that it's going to do, the opposite, like as in fallout here. But that's a good thing to pay attention to, because what that means is that at least on this minute candle, minute by minute, it's trying to pop up here and it can't, or it's trying to fall harder right here and it can't. So that's just a thing that can help you kind of gauge the immediate price action that you're seeing right in front of your eyes. And like when we're day trading, especially right now when I've got no indicators on here, so I have nothing else to help me out other than just the candles. That's the only thing, the only information that I have to work with is just the candles right now. Normally, when I'm trading with my indicators, I've got help. The indicators can help you if you're using them the right way. Now, if you don't know how to use indicators and you just blindly, think that they're a entry or exit signal, then that can get you into trouble. But when you use indicators the right way, they can provide assistance. Right now, I have no assistance whatsoever, so I'm only looking at the candles. And when you are only looking at candles, then, paying attention to things like the wicks and the length of the candles, and obviously, the speed of the movement, and of course, the direction, the trend, the overall trend. Those are all things that are very, very important when you have nothing else to help you gauge where price is going. Hey everybody, I'm back. It is nearly 1 p.m. and you can see we have continued to fall out hard. I am going to sell one more contract. You just heard me sell that contract. You heard the little boo. Just sold one more. So I have one contract on Amazon left. And I'm basically going to just let that go for the rest of the day, because at this point, we are absolutely not coming anywhere close to my stop out point. I've already locked in a decent profit today, and I'm just going to let it ride and see what happens. I don't know exactly how much money I will make, but just the Amazon trades will for sure be over $100 on the day. And my DJT short is still going strong. Just today alone, I'm up nearly $400 on my DJT puts. So yeah, all in all, it'll be for sure over a $500 day today. And as you can see, I did this with no indicators on the chart. Simply price action. That's it. Price action, candlesticks, and support and resistance levels. And that's it. I'm going to stop the recording here because, we've basically done everything that we're going to do today, because I'm just going to leave that last one on. And I might even hold the last contract on overnight, which is something that I do sometimes when I've already made a profit on my previous trades. So we'll see. I'm gonna gauge what happens when we're right at the end of the day. So if we're at the end of the day and it looks like the downward trend is weakening, I might just close out that last contract. Or if it looks like the downward trend is going to continue strong, I might just keep it open and see what happens tomorrow. But the main thing is that I already traded like 5 or 6 contracts and made a nice profit on all of them with no indicators. So that's the moral of the story.
Hey traders, hope you're having a good day. Hope you enjoyed the eclipse. It was absolutely beautiful here. I got the special glasses and was able to look up and check the eclipse out just a little bit ago. It was really awesome. But also, more to the point here on this channel, you saw that today I traded all day with absolutely no indicators whatsoever. I only used the candlesticks and price action and my own identification of support and resistance levels to judge my trades. And I made over $100 trading Amazon today, 6 contracts, I believe, no indicators whatsoever. And I did this for a couple of reasons. The first reason is that I just thought it would be fun to challenge myself a little bit, because it is definitely more difficult to trade with no indicators whatsoever than it is to have certain indicators up on your charts as you trade. So that's number one. But number two, I wanted to refute a thing that I saw online. It's about my book. I got one-star review for my book, and that one-star review really pissed me off. Not simply because it exists, because I know that everybody doesn't like the same things. I mean, I like one thing, you like something else. There's a lot of different reasons for people to like different things. But if you're going to write a one-star review, at least be on topic and be correct about what you're actually saying. So if, for example, somebody wrote me a one-star review and they said, I don't like the way this guy writes, I don't like his writing style. Okay, that's fine, you don't like my writing style. Or if he says, this guy seems like he'd be a real asshole in real life. Okay, you know, I can get that. I might come off as being a little bit abrasive sometimes to some people, so yeah, that's totally within the realm of possibility. But the actual content of the one-star review really bugged me because it's so completely off base. And because it's so off base, I felt like I had to literally refute this and you know, do it in a way that would prove that this guy was actually wrong in his assessment. So first, I will read you what the one-star review actually says. It says, another book on a failed approach that successful traders have long abandoned after surviving entry level. The idea that you can trade indicators to success. The author uses 6 standard indicators, including the 200-day EMA. All indicators are lagging. Despite his claims of only concentrating on his strategy, the book is nothing but filler material and generalities. So, based on this guy's review, you would think that all throughout the book I'm just telling you to throw up 6 indicators and trade with those indicators and you'll be just fine, and that's all you need to worry about. And it also implies that my strategy is not successful. But if you actually look at the book, anybody that's read the book knows this. There are so many places in the book where I say the exact opposite of what this guy claims that I'm saying. So, for example, on page 59 of the book, don't think about indicators as a predictor of what will happen. Your own ability to analyze a chart and read the movement of the candlesticks is how you predict the future. There's one example. Another example, just a few pages later, page 67. I'll repeat this over and over in the book because it's important. Never jump into a trade simply because you see something develop on one indicator. A couple pages later, on page 74, remember, each piece of information you gain from an indicator needs to be compared with other pieces of information in order to get a more complete picture of what's happening. Never make your trading decisions based solely on any one indicator or any one piece of information. always combine all of the information you receive from multiple sources to see the big picture. Once again, on page 78, another problem I have with adding too many indicators to your charts is that in your attempt to uncover the truth, you're actually clouding the truth. By slapping a million different indicators on your charts in an attempt to predict the future, you're just obfuscating the truth of price action that's right there on your screen. Once again, just the very next paragraph. You don't need to try to uncover where price will be an hour from now. You can see where price is right now, no crystal ball needed. Just be aware and tuned into the candlesticks and the patterns you're seeing on the charts and react to that. You are the determining factor in your success or failure, not the indicators you add to your charts. So, what I just read to you is a far cry from what you would think the book was all about if you had listened to Carter Williams and his 1-star review on Amazon. So I just needed to refute all of that bullshit information. And if you own the book, you also know that this is true because you've read it, and you know that I don't simply say just slap up 6 indicators on your screen and you're done. So that's partly the reason why today I wanted to trade with absolutely no indicators on my charts whatsoever and prove that you can do this and be successful doing it even if you have no indicators up at all. All you need to do is use your own mind, develop your sense of being able to read price action on a chart based on the candlesticks that you see minute by minute, and know when to get in and out, and to not trade scared and to not trade greedy. I opened and closed everything today on Amazon. I have no more open contracts. I actually closed my last Amazon contract just a few minutes before close of the day today, and I made just over $100 today just on Amazon. And I mean, I didn't even need to actually pay attention to the chart all that much because most of my trading was done early on in the session. I left, went to the store, came back, closed out one more position, went to the gym, closed out one position while I was at the gym on my phone because it's really easy to do that. Came back home, did other stuff, and then closed out my last contract right before the end of the session today. And then in addition to the $110 I made on Amazon, I made like nearly $400 on DJT on my short that's still in play because just today there's a headline: Trump media has lost about $3 billion in market cap since its debut as the stock sinks again. First sentence of this story: Trump Media and Technology Group stock plunged another 10% on Monday, hitting new lows as the shares continued their free fall from opening week highs. Shares of Trump Media, we're trading at $36.33 late Monday afternoon, down more than $40 from a high of $79.38 per share on the stock's opening day on the public markets. Ouch. The fall has left the company's market cap hovering at around $5 billion, down from highs of more than $8 billion during its first trading week. So if you remember, on Friday I made a video where I said I think that DJT is going to get down to possibly 35 per share, if not lower. And right now, on Monday, as of the latest, we're trading just over 36 per share. So I was correct on that. And once again, I was really tempted to close out some of my position today, but I can't do it. I gotta keep taking the ride down. I'm going to keep it open for probably another few days, and I believe that by the end of this week I'll probably close some, if not all, of the position, because I have 11 days left until expiry. But I definitely don't want to let it get into next week. I want to try and close it out sometime this week. So hopefully, if everything keeps going my way, by the end of this week I'll close that out and realize all of those gains. So this video is probably a lot longer than some of my other videos because I had a lot of stuff I wanted to cover today. But if you liked what you were able to witness today, please hit the like and subscribe button. And if you have bought the book and read it and have not already left me a good review, I would really appreciate it. Help me refute Carter Williams and his 1-star review with some more positive reviews from people who have actually read and understand the book. I would really appreciate that. So once again, hope you're all doing well and trading well, and good luck with everything. I'll see you soon.